All right, greetings everyone. This is Eric coming to you on February the 6th, which is Sunday. Just want to give you guys my perspective, some comments on what took place this past week in the market. So essentially, this is Cubicle Investing's Sunday market commentary. All right, so we're back. Let me move myself out of the way here. So what we are looking at here is the daily chart of the S&P 500. Now, if you guys recall, my last week's Sunday market commentary, I mentioned that it would be a positive psychological indicator if the market was able to actually close above its 200-day moving average. Right, and so at the time I made last week's video, the 200-day moving average was at 44.35. Right, so this past week, right out of the gate on Monday, the market actually closed at 45.15. So definitely well above the 200-day moving average. As a matter of fact, this past week was the best week that the market has had since really the year 2022 started. Right, so as we can see here, this candlestick represents the price action, the daily price action of what took place on Monday this past week. This here is Tuesday, Wednesday. Now on Thursday we had a pullback because of what took place with Facebook, now known as Meta. They came out with some bad news, some bad guidance during their earnings report. And because Meta has such a large impact on how the overall market moves, when the price of Meta stock fell in value, that also took the overall market down with it. However, which is also good news, is that the market was able to recover slightly. And so it ended up on Friday, and it closed at 4,500 and some change. And so it ended the week on an uptrend, roughly up over a little over 0.5%. So definitely a good news story there. And so, and actually, as you can see here, pull out my pointer. Here. So as you can see here, the new 200-day moving average is right at 44.44, and so the market actually came down right to that point, but nevertheless, it settled, or it finished above the 200-day moving average of 44.44. So it closed at 4,500. So again, this is definitely a good news story, because again, anytime that the market is able to close above the 200-day moving average, then that sends a signal to some investors that the market could continue to actually go up or increase in value. So the next level I'm looking for to see if the market can actually accomplish is the 100-day moving average, right? And so the 100-day moving average right now is at 45.69. So it would be interesting to see whether or not during this upcoming week, if the market is able to close above that 100-day moving average. If it is, then we could potentially say, but not confidently, but we can potentially say that the market is back or has reversed trend and will continue on its bullish trend that we have seen really since March of 2020. But nevertheless, I still see volatility being present in the market, and we know that by looking at the VIX, right, the VIX. So the VIX is the quote-unquote fear factor of the market. It's the fear factor of the market, and it lets us know basically whether or not volatility is present. And so anytime the VIX or the VIX is above 20, then we could, basically we can say that there is volatility in the market. But nevertheless, that's not a bad thing, right? Because we as option sellers, which Cubicle Investing is, option sellers, we like when volatility is high, because we're able to sell option contracts for inflated premium and make really good money, right? So again, volatility is not a bad thing. And I see volatility continuing at least for the next several weeks. And the other index I want to look at, in addition to the S&P 500, is the Nasdaq, specifically the Nasdaq 100, which is very tech heavy, right? And so as we can see here, the Nasdaq, again, because of what took place with Meta this past week, also felt the brunt of the decline in Meta stock. So as you can see here, the Nasdaq fell on Thursday, but nevertheless, it was able to finish on an uptrend on Friday. So it was up. It finished up at a little over 1.3% for the Nasdaq. But as you can see here, it's still below its 200-day moving average. And that's not surprising because the Nasdaq, because it's tech heavy, has a tendency to be much more volatile than the overall market of the S&P 500. So as you can see here, it's still well below its 200-day moving average, but nevertheless, it did finish up on Friday, which is pretty good news. But again, nevertheless, I still see some volatility with the Nasdaq because again, it's a tech-heavy stock, and the tech companies are much more volatile than the overall market. But nevertheless, volatility is often the price you pay for outsized gains, right? So never forget that volatility is not a bad thing if you can stomach the volatility and if you are a long-term investor. Now, of course, as an option seller, we are short-term investors, but nevertheless, you can use options as a long-term investment vehicle, right? They call it LEAPs, long-term equity anticipation securities. So you can use options for long-term investing, but nevertheless, we being Cubicle Investing, we focus primarily on short-term investing, anywhere between 1 week and also 45 days. So I want to look at a few stocks here just to highlight their performance this past week. So the first being Amazon. Amazon had basically outstanding earnings report. Had an outstanding earnings report, and so as a result, Amazon actually finished up a little over 13%, which was very impactful for the overall market on Friday, right? Because just like Meta has a major impact on the movement of the overall market, so does Amazon. And so because Amazon popped on Friday to finish up over 13%, that also helped to influence the market's rise on Friday and allowed it to finish up over a little of 0.5%, right? So Snap did great as well. So Snap popped a little over 58% actually. And so we at Cubicle Investing, we are investors of Snap. We do own stock in Snap. So full disclosure. But nevertheless, so Snap did well this past week also, but it doesn't have as big of an impact on the market like an Amazon or a Meta does. And then the last stock I want to look at quickly is Pinterest or Pins, right? And so it did well this past week too. It finished up over 11%, and so those three stocks did quite well this past week, and it should be interesting to see what these upcoming companies convey during their earnings report. So the trade of the week I want to highlight. I actually got into a trade on PayPal, right? Ticker symbol PYPL. As you can see here, PayPal fell greatly on Wednesday this past week, and it settled at 126.28. So it was as high as 175.80, and it has fallen significantly down to 126.08, and it settled, as you can see here. I actually put on an iron condor. An iron condor basically is where you are selling a vertical call credit spread and also a vertical put credit spread. So basically, you're going on both sides of the underlying, and the underlying is just whatever stock or ETF or index you're looking at, right? So I sold on the put side, I sold the 120 and I bought the 110. And on the call side, I sold the 137 and also the 140. And so my credit that I took in for selling this iron condor is $250, and the expiration date is this upcoming Friday. Right, and so if you want to take a look at the actual trade itself, all right. So looking at the actual trade itself, I'm actually on the Tastyworks platform, and so as you can see here, this circle conveys the current price of PayPal, right? So 126.08. We see that the IB rank meets cubicle investing's criteria, and also the fact that PayPal is a very liquid stock, meaning that there's always high volume being traded on PayPal. So I basically sold the 120 and I bought the 110 on the put side. So this is a vertical credit spread on the put side. The width between the strikes is 10. So I got a strike of 120, 110. The difference or the differential is 10. And then so that's the put side. And then on the call side, I sold the 137 and I bought the 140. So basically this is called an iron condor for those who are unfamiliar with trading options. And so basically the objective of this trade, and for me to walk away with the $250, and this is a risk-defined strategy, so I'm not risking a lot of money in this trade. So the objective here is for the price of PayPal to stay in between my strike of 120 on the put side and my strike of 137 on the call side. So the stock can go up and down, do whatever it wants to do, as long as on 11 February, which is when the price, the position or this trade actually expires, as long as the price is in between 120 and 137, I walk away with $250. So again, with options, you can make money regardless of whether the stock goes up or goes down. It really doesn't matter as long as you understand how to trade options and how to use the leverage that comes along with trading options as well.